So we obviously had Google report last night. Look, no surprises from my seat. We said Q1 was going to be fine, and it was. Search estimates had come down into the print in the last few days here to 9.4%. The buy side was closer to 8%. Apparently, there was a third-party data provider out there saying search was going to miss. Our data suggested that search was actually going to come in slightly better. Again, we're splitting hairs on, plus or minus 100 basis points, but still matters for a company the size and scale of Google. The takeaway from a rate of change standpoint is that the business is slowing, right? We know this. We've been calling it out, and it's going to continue to slow. And Q2 is what matters, right? And so we think that, and our data suggests this too, the consensus estimates, even looking at it this morning, are too high for the search business and the advertising business as a whole. But overall, like I said, quarter itself, bang in line. There was a one-time, non-marketable adjustment that boosted earnings that resulted in the big headline beat. Excluding that, it was slightly ahead, but I think earnings estimates for the back half are too high. And that, earnings growth here is probably going to slow to the zero bound along with revenue at some point. Obviously path dependent, have to update things as we go, as you know, but that seems to be where we're going. So yeah, I guess I'll just leave it at that. I just think that the stock reaction makes sense in context of the earnings print, but to frame it up how the rest of the call goes, it's like you fade it, right? Like it's because that the next card that you're going to be dealt is not going to be a great card.
We have a process for the 2 to 3 hour reaction in Google, so we have the risk range product, and it's also in the momentum tracker product. It's going to be right around the top end of its range. It would have to close above 176, I think, to go bullish trends. So that's not in play today. It's playing out the exact same way. I mean, the most important thing to get here and why you pay for the call is to have had the last 2 to 3 months on Google, right, since they reported last time. And that's the same thing from 2 to 3 months from now. And we're going to update it every single day. But it's what have you been doing with Google for 2 to 3 months? And yes, we understand 2 to 3 days. It's not like yesterday Freedman didn't say what he just said, which is they're going to have a good quarter with no guidance, or at least an in line. And the expectations had come down. So, it doesn't surprise me at all that a competitor or whatever came out with a very negative call at the low end of its risk range. That's very typical. And that, like, back to my point on McGough, you get these super low expectations in the super short-term window. So you get the bounce, the CNBC type will chase, then you just reload. I mean, this should I don't know about best idea short, but this should definitely be on your short list from here, from this price.
Next week's going to be really interesting, right? Because, we have Snapchat that reports Tuesday, Meta that reports Wednesday. It's month end. You know how that works. Like going into May with stocks up after a series of kind of better than expected prints or worse than feared prints. But things happen on the lag, and Snapchat and Meta are going to be, both those companies guide, and B, they're going to be more sensitive to, everything that we're talking about here on the ad market. So that's going to be really, really critical, those two earnings prints. So we could be talking about something completely different. So my instinct would be to, like, if Meta's up on Google, you could short Google, but I would, probably be more inclined to short Snap or Meta, if those are up today on those print at the high end of the range. But that's just, that's how we're positioned in the comms position monitor. But obviously, anyone can do whatever they want in the context of their process,
Yeah, I go back to the analogy of the young and the old bull standing on top of a hill, overseeing a grazing group of the other sex, and I'm like, the old bear and the young bear standing up on top of the hill today at the top of the risk range. I just as soon as short all of them. I mean, there's no reason to be buying any Bag 7 stock today. The only stock that's signaling buy, and we nailed that too, is Netflix. The signal did. Now, that thing went absolutely vertical, just like Bitcoin did after I signaled bullish trend. Okay, so you're not going to miss things. If you have FOMO, it's because it's in between your two ears. I called it OP FOMO this morning in the early look. Other people's FOMO, let them deal with that.
Mhm.
Yeah, sell Google, sell Meta, sell Snapchat, sell them all. All right. Top end of the range, that's what you do. And if you've been doing it for 2 to 3 months, you're crushing it.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.